Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. An unusual pattern yesterday, an indecisive spinning top. There was also day 2 in a 2-day homing pigeon pattern, which saw the main body of the action for the day bracketed in between the flatlining short medium moving average overhead, currently at 71.60, and a flatlining medium moving average below, currently 71.09. Now, going back for a moment to the 2-day homing pigeon pattern, this pattern is interesting as traditionally they are seen as bullish reversal patterns. However, data indicates that just about 6 out of 10 times they end up being bearish continuation patterns. It'll be interesting to see which the market follows, the tradition or the data. Finally, just a quick housekeeping point. I will retire targets X in the 71.93 area and target X1 in the 71.49 area after this commentary. They were the targets for the 2 rising wedge patterns I had highlighted recently and were achieved last week. So far today, a stronger opening, with the market looking like it was following tradition rather than the data. However, since then prices have fallen down below the medium moving average and the recent 50% Fibonacci line at 70.62, and they've even pierced the long moving average, currently 70.05, before pulling back up just over it. In the process of all this, the market is now set up not only for a bearish engulfing pattern, but also for a possible key reversal down today as well. If the market closes below 70.39, then we'll be on. Right now, it seems the market has been following the data rather than tradition, but is not keen enough to push down for a daily key reversal down and is looking at an outside day at the moment. German DAX futures. A second bearish black crow yesterday and also day 2 in a 2-day homing pigeon pattern. It was also the second consecutive close below the long moving average, currently at 15.416. And also the September to December 2020 reverse head and shoulders neckline, currently at 15.389. Now, going back a bit to the 2-day homing pigeon pattern, this pattern is interesting as traditionally they are seen as bullish reversal patterns. However, data indicates that just about 6 out of 10 times they end up being bearish continuation patterns. But it's really interesting to see which the market follows, the tradition or the data. Finally, just a quick housekeeping point. Target X in the 15.69.8 area on my daily chart was the primary target for the recent bull channel rising wedge pattern, with target X1 in the 14.795 area as the secondary target. Our target X was achieved last week, and we are not that far from target X1. So far today, a slightly higher open, with a move up towards the long moving average overhead. However, this was not to test it, but rather to gather ammunition for a fresh attempt lower. Right now, the market has moved down through Friday's low at 15.021 and towards the early October low at 14.795. Pulling back a little bit. This has left us with what looks like now to be a possible bearish engulfing pattern for today. It also looks like the market has followed the data rather than the tradition with regard to the 2-day homing pigeon pattern. US E-mini S&P futures. An immediate countering bullish thrusting pattern type action yesterday after last Friday's huge key reversal down and bearish engulfing pattern, and also last week's weekly key reversal down. Although the move up was reactionary, it may have lacked enough reaction mass to alter Friday and last week's patterns. Interestingly, despite the moves lower, the market still has not reached down to the significant September high at 45.49.5, nor down to what looks like a strong combination of the May to date uptrend, currently at 45.49, and the short medium moving average, currently 45.48. It'll be interesting to see how the market reacts to a test of these levels. Just a quick housekeeping point. I had a speculative possible target X above in the 47.72 area. This target X was for the broken old rising wedge pattern from June to November. I've never been overly keen on this idea topside, but it seemed appropriate to share it with you just in case. Well, it'll be retired after today. So far today, higher open, but then a big move lower, below the low of yesterday, and immediately making me think of the last 3 days as a possible bearish stick sandwich. However, that action would not fit, and I'm inclined to look at it as instead a possible bearish halfway hesitation. It's still way too early on that, and it is an imperfect pattern if it did happen. But if it did happen, then we could see a possible move down to the 45.20 area. I'm not marking that on the chart. And that's in between the short medium moving average overhead and the medium moving average, currently at 45.03, that's below. I'm not wholly wedded to this idea, but I wanted to let you know my thoughts just in case. French CAC 40 futures. A second bearish black crow, well within Friday's huge gapping lower bearish opening long black Maribozo, thus making it a possible day 2 in a 2-day homing pigeon pattern. Now, homing pigeon patterns are interesting, as traditionally they are seen as a bullish reversal pattern. However, data indicates that just about 6 out of 10 times they end up being bearish continuation patterns. So it would be interesting to see which the market follows, the tradition or the data. Next, a quick housekeeping point. We had target X1 in the 1795 area as the initial target for the recent June to October diamond continuation pattern. Now, this was achieved. And we also have a secondary target X2 in the 72.75 area, which has obviously been harder to achieve. I will leave these two both on the daily chart for the moment. Finally, it was interesting how the market for a second consecutive day closed with the bracket within the bracket formed by the overhead short medium moving average, currently at 67.82, and the medium moving average below, currently 67.30. Now below that, we have the important June high at 66.87. So far today, a significant gapping lower open below the important June high and close to Friday's low. However, it seems the market has frightened itself with such a bold move, and prices have pulled back up over the June low, but not as far as the medium moving average overhead, nor as far as really filling today's gap. After all, it seems the market is still following the data rather than the tradition. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.